So today we are going to look at partnership account, which we have done some previous videos for the partnership, which we all know that partnership is a business. Partnership, when we talk of partnership, so is a business carried out by two or more than persons. Two or more than persons, known as partners, and their main objective is to make profit. So these partners, by law, they are required to prepare their financial statements, which one is current account, fixed account. We use this current account and fixed account to show the distribution of the share capital of the partners. If there is any admission of a partner and they decided to write off some goodwill, then we will also account in that account. If there is any withdrawal from the directors or the drawings, we'll also going to account in this account. Any changes in the interest on capital and on drawing, we gather here in this account. Salaries to partners, we also account here. And then number 2 of the statement is the income statement. And number 3 is the SFB. We call it the statement of financial position. We have talked more on this in our previous classes or in our previous videos. If you go back, you will know more detail on this. But today is a kind of a revision, which we are tackling a past paper of CASNEP, August 2025, the latest sitting question 3A. So let's see that question. So let's read the question, which is August 2023, question 3A, which we have been told that Anita and Bansi are in partnership sharing a profit in losses in the ratio of 3 to 2 after charging an annual interest of 1.2 million and 1.5 million to Anita and Bansi respectively. Both partners are allowed one-time interest at the rate of 4% per annum on opening account balances. On 1st December 2024, they admitted Carol, so you should note that the admission date for the new partner, Carol, and agreed to share a profit in the ratio of 5 to 4 to 3. The partners' trial balance as of 30th June 2025 was as follows. So we have the trial balance there, which is, I'm not going to read, but we are going to read the additional information. Number 1, Carol had been in the office manager for the year commencing 1st July 2024, was on a salary of 1.5 per annum. So who was the Carol here? Anita. Okay, so which means that Carol was a manager in this company before she decided to join the business as a partner. So, which means you'll have to go to pay that salary. Interest on capital at the end of the year was one-time rate of 5%. Carol introduced a motor vehicle valued at 600,000 and 1.5 cash part of this capital contribution. The only entry made in the respect of Carol admission was 1.5 million paid into the bank. So they have not yet accounted for the other value, which is 600,000. We will account that one in the motor vehicle account. On 1st December 2024, goodwill was valued 3.6 and it is to be written off. Inventory on as of 30th June 2025 was valued 7.425 million. 1/3 of the year sales were made before admission of Carol and 2/3 after admission. So we are going to apportion the sales as per that rates or the proportions. Accrued expenses include 30,000 for the insurance and 250 for rates and rent. Cost of sales and gross profit are apportioned according to the sales, while all other expenses are apportioned according to time. Good. Depreciation is provided as per the annum at the rate of motor vehicle 25% on a straight line basis and 20 on a reducing balance method. So they need the P&L, profit and loss account, and SFB, statement of financial position, totaling to 20 marks. Totaling to 20 marks. Very easy. Once you know our principle, debit and credit, then this question will be very simple for you. This question will be very simple for you. We are admitting a new partner on December, 1st December. So from 1st January to 30th June 2025, that is 6 months plus 1 month from December. So we are having 7 months and 5 months. So we're going to apportion our board for our working 5 months and 7 months and total. I'm going to use my good ruler. I'm using my good ruler here. My good ruler. Anyone with a ruler? I know you don't have rulers. So it's only me who have a ruler here. It is only me who have a ruler here. It is only me who have a ruler here. Good. So having done that, you can start journaling these transactions. We start with the sales as usual. I'm not going to write the heading. I know you know how to write the heading. Who doesn't know how to write the heading? You just need to write Anita, comma, Bansi, and Carol income statement for the year ended 30th June 2025. That is the heading. Good. So come and put for me sales. How much do we have as the total sales here? 61,800. We have been told for this one, we'll apportion sales as 1/3. If we check note number 6. So we are having 1/3. Here is 2/3. So get 1/3 of 61,800, 2/3 of 61,800. How much are we having? Take your good calculator. 2 we divide by 3, multiply by 61,800. Here I'm having 41,200. I'm having 20,600. Cost of sales. We start with the opening stocks. Use the same proportion. How much do we have as our inventory on 1st July 2024? 61,50. We have been told to use the same rate for the cost of sales. So I'm going to use the same rate again. For this one, I'm having 20,50. What about the other side? This one, 41,100. Purchases. Get the total first and put here. Divide again by the ratio which we have been given there. I'm having here 12,900 multiplied by 48,700. 25,800 800 less closing stocks. Less closing stocks. How much do we have as our closing stock? Get note number 5. 74.25. Don't forget to show examiner that you have added some 3 zeros here because of the space. Now, again, use the same proportion, 1/3 multiplied by 7,425 to give us 24.75. Subtract 2/3 multiplied by 74.25. This one to give us 49.50. So we shall get our total cost of sales. Let's have our total cost of sales, 20.50 plus 12,900 minus 24.75. We are having 36.75. Subtract with this 2,600 minus answer. We are having a loss of 10,075. That is a gross loss. That is a gross loss. Okay, good. This one, 4,100 plus 25,800 minus 49.50, having 24,950. 41,100 minus answered. We have gross profit of 16,250, 61,800, not 61,800, 61,50 plus 38,700 minus 24,25. We are having a total cost of sales of 37. Can put here 37,425. So subtract from this to get to gross profit. We are having 24,375 as our gross profit. So here we have gross profit or loss. Gross profit or loss. Then we less expenses. We don't have any other incomes, so we go straight to expenses. Which for expenses, we have been told to apportion according to the time. So we are going to apportion as per 5 months and 7 months. So we start with the salaries. Note number one was relating to salaries, which we are going to check the salaries in the trial balance. Check the salaries in the trial balance, which is 8,400 plus the accrued, which is 1440, not number 1 for Carol. So if you add the two, how much are we getting? Divide by the months. This one now we are going to apportion by the month. So 98,400 multiplied by 5 divided by 12. Here having 41,100, 98.40 minus answer. Here I'm having 57.40. So we are done with that. We go to another expenditure. Let's finish first with the additional information. Number 3 is for admission, disposal. Number 7, accrued expense include insurance. So let's have insurance. So insurance, we will take whatever they are paid there, 4170 plus the accrued, which is 30. So how much is the total? Giving us 4,200 multiply by 5 divided by 12, so that we have 1,750. 4,200 minus answer 24.50 here. Rates, let's have rates. Rates also, I will check whatever I have it in the trial balance, which is 21.50 plus the accrued one, which is 250. So 21.50 plus 250, the total of 400 multiply by 5, divide by 12. This one is 1000. Must answer 1400. Very simple. Very simple. Depreciation. Let's go straight to depreciation. Motor vehicle. Depreciation. Depreciation. So we're going to have for this, for the first 5 months, there was no extra value of 600 which was introduced by Carol. So we are going to calculate the normal depreciation for the motor vehicle with our cost there, that is 4,800. Check 4,800 multiply by the rate, which is 25%. Multiply by the rate, which is 25%. So 25% multiplied by 48. Yeah, 25. So 25% multiplied by 48 multiplied by 5 divided by 12. So here we are having 500. The other side. Now on this one, we have now 4,800 plus the value of motor vehicle, which was introduced by Carol. So we take 4,800 plus 600. This one, on this one now we'll calculate using not 48, but 5,400. Reason, we have already included that value of Carol. So multiply by 25%, which is 2.25, and then multiply by 7 divided by 12. So here we're having 7.25. So if we add 500, having a total of 1287.25. 1287.5. And that equipment, there was no new equipment. So we take whatever we have there, which is 20%. It is on a reducing balance. So take the cost, which is equipment cost 15,450 minus accumulated depreciation, which is 6690, sorry. So 15,450 minus 6690 multiplied by 20%, total of 1752. A portion multiplied by 5 divided by 12. Here we have 730. And then on the other side, we have 1022. So that is all the expenses which we have it in the additional information, unless we have left one. So which means we have done with additional information expenses. So let's see the trial balance if we have any other expenses. Insurance rates, which is we have done with that. Bad debt. Let's have bad debt. How much is the total of bad debt? 636 multiplied by 12. We have 265. Here, 371. 371. Do we have any other expenses? After bad debt, I'm not seeing any other expense. Get the total of this so that we have our net profit or loss. So we can start with the total. 2840 plus 4200. So I'm getting a total of 211526 here as my total expenses. What about this? It will not be the same because of the change in the depreciation for motor vehicle. This one I'm getting 11,770.5. What about this? This is for 100. So this one is 83.45. So subtract, and remember this was loss. That was loss. So the loss will go to skyrocket here. So how much is our gross net profit here? So check 24, 375 minus 21,155.26. So I'm getting 42, 59.24. About the other side, 16 to 50 minus 11,770.825. Yeah, I'm getting 44, 79.25. About the other side, these are negative, so minus 1075 minus 83.48. We are having 18 or 20, which it will not be. Is it okay? That means this one is more. This one, because if you add this and this, we should have a positive, but this one is a negative 18, which means there's a problem here. So get 1/3 multiply by 6189, which is okay, this one. So let's confirm this. 2050 plus 12,900 minus 1224 75. This one should be 12, not 30. How did I get this 30? How did I get that 30? Oh yeah. How did I get that 30? So 2050 plus 12,900 minus 2475. This one should be 12,475. So check 20 minus answer. 2,600 minus answer. You should have a gross profit of that one. So minus 83.45. So here you'll have a loss of 2020. So if I add this, I should get this plus 4479.25. Yes, I should add this. So which means this is correct. So this is our net profit. This is our net profit. Which we are going to share now. This profit. We are going to share this profit. So if you have written, then I can wrap and take this up here so that we can have what is called appropriation account. Examiner has not asked you for the appropriation account, but you cannot do a balance sheet or the statement of financial position if you don't have appropriation account. You don't have appropriation account. Appropriation account. Appropriation. So let's take this profit up there so that we do appropriation account. So appropriation account, I will pick this up here. 2020 is a negative. The other one is 44, 79.5, and the other one is 42, 59.24. So now, so this is the net profit. So let's have appropriation account. For the appropriation account, we will say add salaries, or let's add the interest on drawings, interest on drawings, which we don't have, so put dash dash. There's interest on capital. Let's interest on capital. Do we have the interest on capital? Yes. We have been told for the first 5 months is 4%, and for the last 7 months is 5%. So we'll have an advance and Carol. Carol was not there here, so it will be dashed. Now, for Anne, we have the total capital, which we have there, which is 3750 multiplied by 4%. The other one is 3000 multiplied by 4%. So how much do we have? 0.4 multiplied by that 750. We have 150 here. The other one is 120. So we don't have for Carol. On the other side, we'll have the same, that 750 multiplied by 5%, 3000 multiplied by 5%. Now this one, Carol, I may introduce 600 and 1500, which is to make it a zero. So that one will come to 2100. So you have 2100 multiplied by 5%. So what is the interest on capital? So this one is 1875.5. This is 150. This is 105. So add the two so that we have the total 150 plus 187.5. This one we have 33. 37.5. 120 plus 150. This is 270. And then this is 105 because we don't have another interest on the first. And then also we less the salaries to partner. Salaries to partners, which we'll also divide. We have Anne, and we have 1200, the first information. Bansi, we have 1500. Divide by that ratio of 5. So 1200 multiplied by 5 divided by 12. This one is 500. And then 1200 minus 500. Here we have 700. The other one, 1500 multiplied by 5 divided by 12. 625. Take 1500 minus answer. Here is 8. 5. So salaries to partners, we have done with this. So add this, add that. So since all of them is subtraction, we can add all of them and then we subtract here. So it will be 150 plus 120 plus 500 plus 625. So I'm having a total of, subtract that. And then this one, 185.5 plus 150 plus 105 plus 700 plus 875, having a total of 17.5. So subtraction, the 337.5 plus 270 plus 105 plus 1200 plus 1500, giving a total of 34, 12.5. So 4259.4 minus answer, having a profit of, which will not be the same. The other side, 4479.5 minus 2017.5, having 2462. This is a loss, negative 220 minus 1995. So we're having a loss of 16. That. So this is the profit to be shared. So profit to be shared. So for Aunt, Bansi, and Carol, this one we are going to share in a ratio of 3 to 2, which is 3 over 5 multiplied by that. Another one is 2 over 5 multiplied by this. This one we don't have. On the other side here, we are going to use a ratio of 5 to 4 to 3, which is 5 over 12, 4 over 12, 3 over 12 multiplied by this, so that we share that profit. So for the Anne, for Anita, 3 over 5 multiplied by 16.15. Here is 96,699, which is a negative. Another one, 2 over 3 multiplied by 1615, which is 7. No, this one should be less. 1615. This one is 646, also is a negative. What about on the other side? 5 over 12 multiplied by 2462. This one we are having 1.83, round off 2 decimal place. 4 we divide by 12, or 5 plus 4 plus 3, we are getting 12. Good. 4 we divide by 12, multiply by 2462. Having 820.67. And then 3 we divide by 12, multiply by 2462. This one we are having 615.5, which we don't have for the other one. So this one will come here. Now get the total. This one is a negative and this one is a positive. So negative 6,969 plus 1025.83. So we should have 56 here, 0.83. The other one, negative 64, 646 plus 820.67. We are having 17, 4.67. So that is the profit. That is the profit to be shared. So having done this,